big news that trickled in yesterday from RBI. Now, the RBI has reviewed regulatory framework for deposit-taking housing finance companies as it seeks harmonization of regulations applicable to HFCs as well as NBFCs. Now, the new regulations will be applicable with effect from 1st of January 2025. My colleague Ankur is here with more details on what this new regulation means and the rationale behind it. Ankur.
Yes, Reserve Bank of India has released, in fact, reviewed the regulations around HFCs, and this is not only done for HFCs, but also harmonization of rules between HFCs as well as NBFCs. Now, first and foremost requirement which Reserve Bank of India has put in is that 15% of liquid assets needs to be maintained for deposit taken HFCs, and this number was 13% earlier. So, 2% increase is not going to happen all of a sudden, but there is a time which will be provided by Reserve Bank of India. So, first deadline is January 1, 2025, and after a few months 15% benchmark needs to be aligned for deposit taking NBFCs. Apart from that, regulations on safe custody of liquid assets needs to be aligned with NBFCs, and that is a requirement for deposit taking HFCs only, but they have to maintain that full asset cover is available for public deposits as and when those housing finance companies which are taking deposits. Apart from that, if at all HFCs needs to be eligible for taking public deposits, the minimum investment grade rating needs to be obtained from credit rating agencies, and not only that, there is also a rule which has been applicable to HFCs now, that ceiling on quantum of public deposits held by deposit taking HDFCs needs to be reduced to 3 times to 1.5 times of net owned funds which are there for housing finance companies. Apart from that, Reserve Bank of India has also mentioned that deposits can now have a maximum maturity of 5 years, which was 10 years earlier as per mandate by Reserve Bank of India.
Okay, thank you so much for that, Ankur.
If you like this video, then like, share and subscribe to ET Now.